Hey everybody, how's it going today? Well, in this video, I want to go over the cruise line stocks. They just got a huge upgrade from Barclays, so I want to talk about that. I want to go over why I am bullish on the long-term outlook on this sector. And I also want to show you the charts, why I think they are coiling up to explode higher. Before I get into it, I just want to say thank you for subscribing to my channel and for hitting the like button for me. I really appreciate that. If you are new to the channel, I like to find short-term and long-term trading and investing opportunities in typically lower-priced stocks. I like to find undervalued, underappreciated stocks with high growth potential and talk about all other things finance-related as well. If that's something that interests you, please subscribe so you don't miss any future trading and investing ideas. Also, I am not a financial advisor, so please do all of your own research before buying any of these stocks. In recent news, Barclays analyst Felicia Hendricks upgraded the cruise ship operators Carnival Cruise Line, Norwegian Cruise Line, and Royal Caribbean Cruise Line to overweight from equal weight. She also raised her price target to $31 from $18 on Carnival, to $26 from $17 on Norwegian, and to $68 from $50 on Royal Caribbean. She also states in a note to clients, "We are nearing an inflection point in the cruise sector." After the report came out, Carnival shares were up 5.1%, Norwegian shares were up 8.9%, and Royal Caribbean shares were up 4.7%. Now, she also said, while chances are high that the CDC extends the no-sale order date again, likely into the fourth quarter, Hendricks believes the comments from the agency will be positive and could signal a near-term return to cruising, which could be a catalyst for the shares. While a removal or lapse of no sale order would be the most positive outcome, the analyst said a fourth quarter start date combined with positive language bodes well for sentiment, and it removes uncertainty and, most importantly, concerns about liquidity. Hendricks said much has changed since she downgraded the cruise sector back in June. Cruises have started up in Germany and Italy, and booking data from each of these cruise companies have indicated pent-up demand. In addition, she said, a health panel formed by Royal Caribbean and Norwegian Cruise Lines unveiled a 74-point plan that the companies hoped would lead to U.S. cruises to resume. Hendricks also said Carnival said it would dispose of 18 ships, which combined with near-term industry-wide ship delivery delays allows the industry to recover over the next several years against a slower supply growth backdrop. She said, even if the CDC extends the no-sale date further than expected, we believe the worst is in the past for this sector. Now, here's a short clip on that upgrade.
I mentioned these bullish calls we got today on the cruise lines. Barclays has upgraded Carnival, Norwegian, and Royal Caribbean, all to overweight. This is a big call, considering where we are, just coming off that story that Sue ended her report with, John Najarian, about this pickup in cases in the UK. We've got a pickup in cases in a number of different places. You own Carnival?
I've owned Carnival for a while here, Scott. I added to it on this Barclays call. I also bought Norwegian Cruise Lines. And one of the reasons here, Scott, was that when you look at the bonds, for instance, those Carnival bonds that were priced at $99 with an 11.25% coupon or something like that, they shot all the way through 112, maybe 115. That's been a while ago when those were issued. I think that they announced that one back in April, Scott, and I bought those as well. And one of the reasons I bought them was I think our smart guy, Mark Lazary, was buying those bonds, and he put me into those basically through his enthusiasm for it. So I do think that they see a recovery, Scott, when you price in Armageddon, which many of these in the travel industry stocks, whether it's airlines, cruise lines, whether it's hotels and so forth, many folks have been basically priced to almost zero, and I think there's still value in many of their assets. They just sold 2 boats, Scott, Carnival did, which is in line with what they said that they would be doing, so they're getting rid of some of the less efficient older boats and, you know, holding on to the rest of their fleet. I think this is something that Barclays is right about, and that's why I was comfortable adding to it.
Okay, so they go to $31 on Carnival from 18. They go to 26 from 17 on Norwegian. They go to 68 from 50 at Royal Caribbean. Those are all sizable target increases. Kramer, by the way, on Twitter earlier today called Norwegian, quote, best in show.
Now, this is all my opinion, but even though the cruise liners are not out of the woods yet and the risks are still high at this point, I'm very confident they're going to be able to make it through the other side of this. Historically, the margins in this industry have been pretty good, and when things get back to normal, they should be more profitable than before. When companies go through a brutal patch in their business like this, they learn to run their operations as resourceful as possible and trim the fat everywhere they can. If they can make it through, I think Wall Street is going to be surprised how quickly they get back to profitability and how fast they start paying dividends again. Another big concern they have right now is the massive amounts of debt they had to take on to keep afloat during the CDC no-sale order. I think the interest rates are going to remain low for quite some time, and they should be able to refinance a lot of this debt they had to take on at unfavorable rates as soon as they get back on track. I know many who love to go on cruises who can't wait for the cruise lines to reopen, so I think Wall Street is underestimating the pent-up demand here. Once the cruise lines get the okay to resume operations, I think these stocks are going to see a sharp move up. To me, stocks in this sector look like they are coiling up to explode higher, and they just need a catalyst to do so. All right, the first chart I'm going to bring up is Royal Caribbean Group. I'm going to bring that one up first because it is the strongest of the three that I'm watching when I'm watching Royal Caribbean Group, Norwegian Cruise Line, and Carnival Cruise Line. And Royal Caribbean actually bottomed under $20 intraday back in March. So if you were fortunate enough to grab some under 20 that day, right now you'd be sitting on over a triple as it sits at $66 a share. And this chart is the most bullish, number one, because they've risen more than the other two, and number two, because it looks like it is about to get back above the 200-day simple moving average, this yellow line on the chart. Found resistance at it a couple of weeks ago, but it looks like it's heading back towards it, and I wouldn't be a bit surprised if it pops above it here in the next couple of days or so. But if we back the chart out, we can see that all the way back in 2017, it was over $100 a share. So from 2017 all the way to the economic shutdown, it was trading for over $100 a share. And right now it's still, even though it's had a nice move up off the bottom, it's still around 50% off the all-time highs. If I go to a weekly chart, we can see that this pattern looks quite similar to the pattern that it made in 2009 during the financial crisis. If you were fortunate enough to grab some in 2009, if you were fortunate enough to grab some around $6 a share, you'd still be up over 10 times your money. And this is the kind of move that I'm expecting a lot of the leisure stocks to have over the next 8 to 10 years. Some of them are probably going to go bankrupt, but I don't think the cruise lines are going to go bankrupt. I think there's a lot of pent-up demand for the cruise liners, and if they can make it through the end, I think they are going to be in good shape. Now let's take a look at Norwegian right now. And Norwegian, go back to the daily chart. Norwegian looks more like Carnival Cruise Line. They are probably performing just a little bit better than Carnival, but we can see that they are making what looks like a rising, maybe more of a bullish triangle. But these lows are getting higher, and price is starting to compress against that resistance line. And all we need is some good news coming out of this sector, and I think we are going to see these stocks take off. Because once they get through these resistance areas and can get over the yellow line, the 200-day simple moving averages, I think a lot of institutional players are probably going to start piling back in. But probably by the time it gets up into the 30 area, it's going to be too late for a lot of players out there. I mean, that's probably when it's going to look like the coast is clear once they get through the other side of this. But let's go take a look at Carnival Cruise Line next. And Carnival Cruise Line is the weakest, but the pattern is very similar to the Norwegian cruise lines. You can See, it's making the higher lows. Even though this last low wasn't much higher. I'm still going to give Carnival the benefit of the doubt. But if we get some good news and we can pop it above here, get past that yellow line, I think, no pun intended, it's going to be smooth sailing for a while. But let me bring up the NASDAQ on the Qs. In the videos I made last week, I was saying that I was thinking that the market, the overall market was, I thought looked like it was starting to bottom. It was getting bullish, and we should be popping over these moving averages soon. And we got a move over it on the Qs today. Now, this is intraday, so anything can happen. It could always reverse and then end below it, but looks like we're starting to get that bullish move up. So that's one of the main reasons I didn't get short any stocks last week. It was looking like it was carving out a bottom and it was going to move higher. Now, we'll have to wait and see if this move lasts, if it continues to go higher, or if this was just a fake out and it turns right back around. But as of right now, the market is looking really good. All right, well, before I get out of here, let me go back to Carnival Cruise Line. Just a second. Let me get this stuff out of here. And go to the weekly chart. So I'll show you one more pattern that is developing. If we look at this one, and then we back out to 2009. See if I can take the chart back a little bit. It's looking kind of similar, huh? And that's why I wouldn't be surprised if we get one of these type moves the rest of the way. The move down in Carnival Cruise Line has been more exaggerated. Of course, Carnival is having to go through a lot more than they did during the financial crisis. Yeah, a lot of people were taking less vacations back then because there was so much uncertainty in the economy, but Carnival wasn't shut down like they are now. So even though Carnival is under substantial pressure, if they can make it through here, I think there is a lot of reward on the other side. All right, folks, that's all I have for you today, so I'm going to end the video right there. Please like the video for the YouTube algorithm if you enjoyed it, and subscribe to my channel if you haven't already so you don't miss any future trading and investing videos. Leave me a comment down in the comment section if you have anything you want to say, and please don't hesitate. I love talking about this crap, so you're actually doing me a favor when you leave me a question. But and I also have my M1 Finance account referral link down there. If you use that link and open up an account, we will both get the startup bonus. And I also have the links to a couple of my favorite investing books down there as well. Thank you so much for watching my video all the way to the end. And until next time, take care, everybody.